ParthKuchana.com, complete fundamental and technical analysis of stocks and other financial industry updates. Hello, welcome to Partha Kuchana Finance channel. This video provides complete fundamental analysis of Reliance Industries Ltd Reliance stock. Disclaimer: this analysis is for educational purpose only. This is not financial or investment advice. Make financial and investment decisions on your own. Valuation. Let's focus on assessing return on capital, equity efficiency, overall pros and cons, and valuation and calculation of key ratios and interpret them. This is based on market cap, current price, high-low, ROCE, ROE, pay ratio, book value, face value, financial ratios data. Return on capital employed, ROCE. Reliance's ROCE stands at 9.99%. This metric shows the company's efficiency in generating profit from its capital employed. Although this represents a moderate return, it has seen fluctuation over the years. For instance, ROCE was 10% in March 2013, remained consistent at 10% through March 2017, and has fluctuated since, reaching 10% again in March 2024. A ROCE of around 10% is relatively good, but compared to industry benchmarks, it suggests room for improvement in capital utilization. Return on equity, ROE. The company's ROE is 9.23%. ROE measures the profitability relative to shareholders' equity. This figure indicates that Reliance is generating a reasonable return on shareholders' investments. However, considering the industry average, which may be higher, this ROE suggests that while the company is performing adequately, there's potential for enhanced profitability and better shareholder returns. Price to earnings, PE, ratio. Reliance's PE ratio is 28.5. This ratio indicates how much investors are willing to pay for each unit of net income. A PE ratio of 28.5 is relatively high, suggesting that the stock is priced at a premium compared to its earnings. While this might reflect positive market sentiment and expectations of future growth, it also implies that the stock could be overvalued relative to its current earnings, requiring careful consideration. Book value. The book value of Reliance is 1,173 rupees. The book value per share provides insight into the company's net asset value per share, which can be compared with the market price to assess valuation. With a current stock price of 2,895 rupees, the stock is trading at a significant premium to its book value, indicating that market expectations for the company's future performance are high. Face value. The face value of Reliance's stock is 10 rupees. This is the nominal value of the stock as stated on the certificate and does not reflect the market price or the intrinsic value. It's useful for understanding the basic valuation and comparing with other stocks. Pros. Reduced debt. The company has successfully reduced its debt, which improves financial stability and reduces interest expenses. Consistent ROCE. Despite fluctuations, the ROCE has remained relatively stable, indicating effective capital management. Cons. Low ROE. The ROE of 9.23% is lower than industry averages, which might reflect less efficient use of equity to generate profits. High PE ratio. The high PE ratio suggests that the stock may be overvalued relative to its current earnings, indicating that investors have high expectations for future growth which may not be guaranteed. Conclusion: Reliance Industries shows a strong capital base and has managed to reduce debt effectively. However, the company's high PE ratio and moderate ROE suggest that while the stock is perceived favorably in the market, its valuation may be high relative to its earnings and return on equity. Investors should consider these factors and compare them with industry benchmarks and future growth prospects before making investment decisions. Financial health. Let us focus on financial health and leverage analysis. Review asset and liability management and equity changes. This is done focusing on assets, liabilities, equity, key metrics from the balance sheet over the last several quarters. Fundamental analysis. Assets. Trend: Reliance's total assets have grown significantly from 362,357 crores rupees in March 2013 to 1,755,986 crores rupees in March 2024. Composition: The growth is driven by increases in fixed assets and investments, though there is variability in capital work in progress, CWIP, and other assets. Interpretation: The substantial increase in total assets reflects ongoing expansion and investment in infrastructure and other assets. The rise in fixed assets suggests significant capital expenditure, while fluctuating investments and CWIP indicates strategic shifts or ongoing projects. Liabilities. Trend: Total liabilities have also increased from 362,357 crores rupees in March 2013 to 1,755,986 crores rupees in March 2024. Composition: The rise is mainly due to increased borrowings and other liabilities. Borrowings increased significantly, indicating higher leverage, while other liabilities have risen steadily. Interpretation: The substantial growth in liabilities, particularly borrowings, reflects Reliance's funding of expansion and operational activities. High leverage could indicate increased financial risk, but if managed well, it could support growth and return on investments. Equity. Trend: Equity capital has remained relatively stable, with minor increases from 2,936 crores rupees in March 2013 to 6,766 crores rupees in March 2024. Reserves have grown substantially from 179,119 crores rupees to 786,715 crores rupees over the same period. Interpretation: The stable equity capital coupled with growing reserves suggests a strong internal financing capability and profitability. The increase in reserves reflects accumulated profits and reinvestments, which bolster the financial stability and capacity for future growth. Key metrics. Leverage. The substantial increase in total liabilities compared to equity indicates a high leverage ratio. This could increase financial risk but also suggests aggressive growth strategies funded by debt. Asset management. The increase in assets, especially fixed assets and investments, shows a focus on long-term growth and expansion. However, the fluctuations in CWIP and investments need monitoring to ensure they align with strategic objectives. Pros and cons. Pros. Strong asset growth. Significant increase in total assets and fixed assets demonstrates robust expansion and investment in growth. Healthy reserves. Growing reserves indicate effective retention of earnings and financial stability. Cons. High leverage. Increased borrowings and total liabilities relative to equity suggest elevated financial risk. High leverage might impact financial stability if not managed prudently. Variable CWIP and investments. Fluctuations in CWIP and investments could indicate project delays or strategic shifts that require careful management. Conclusion. Reliance has shown robust growth in assets and reserves, reflecting effective expansion and investment strategies. However, the high level of leverage due to increased borrowings poses financial risk. Balancing debt with earnings and maintaining effective asset management will be crucial for sustaining growth and mitigating financial risk. Cash flows from financing activities. Now let's look at the trend and interpretation of cash from operating activities, cash from investing activities, cash from financing activities, net cash flow. This is done focusing on cash flow data over the last several quarters. Cash flow analysis of Reliance stock. 1. Cash from operating activities. Trend. The cash flow from operating activities has shown a generally positive and upward trend from 36,918 crore rupees in March 2013 to 1,58,788 crore rupees in March 2024. This consistent growth indicates that Reliance has been increasingly efficient in generating cash from its core business operations. The substantial rise in the recent years suggests improved operational performance and a stronger ability to generate revenue. 2. Cash from investing activities. Trend: cash flows from investing activities have consistently been negative, with outflows increasing from negative 27,601 crore rupees in March 2013 to negative 114,301 crore rupees in March 2024. The high outflows reflect significant investments in capital expenditures, acquisitions, or other long-term assets. This trend is typical for companies undergoing expansion or significant strategic investments. 3. Cash from financing activities. Trend: the cash flow from financing activities shows considerable volatility. It ranges from a minor inflow of 408 crore rupees in March 2013 to an outflow of negative 16,646 crore rupees in March 2024. The fluctuations indicate varying financing strategies, including debt issuance, repayment, and equity-related transactions. The recent outflows suggests a possible reduction in financing activities or increased repayments of debt. 4. Net cash flow. Trend: net cash flow has fluctuated significantly over the years. From a positive 9,725 crore rupees in March 2013, it turned negative in several years but improved to a positive 27,841 crore rupees by March 2024. The recent positive trend is encouraging and suggests that despite past fluctuations, the company's cash management has become more robust, leading to a healthier overall cash position. Pros and cons. Pros: strong operating cash flow. The increasing cash from operating activities demonstrates solid operational efficiency and profitability. Improved net cash flow. The positive net cash flow in recent years indicates effective cash management and a stronger liquidity position. Cons: high investing outflows. The consistently negative cash flow from investing activities might indicate heavy spending on growth initiatives, which could impact short-term liquidity. Volatile financing cash flows. Significant fluctuations in cash flow from financing activities could point to instability in financing strategies or high levels of debt. Conclusion: Reliance exhibits strong cash generation capabilities from its operating activities, which is a positive sign of its core business health. However, the high and increasing cash outflows from investing activities suggest substantial investments in growth or asset acquisition. The volatility in cash from financing activities and past fluctuations in net cash flow reflect a complex financial strategy but have recently improved, indicating better cash management and financial stability. Overall, Reliance demonstrates a positive trend in cash flow, suggesting a robust financial foundation with a focus on long-term growth and expansion. Revenue trends, profit margins, expense management. Let us now focus on revenue trends such as growth or decline, seasonality. Profit margins, like gross profit margin, operating profit margin, net profit margin, and expense management. Revenue trends. Reliance has shown a consistent increase in sales over the years, with significant growth from 395,957 crores rupees in FY 2013 to 925,289 crores rupees in FY 2024. The revenue trend indicates strong business expansion and robust market presence. Despite occasional declines, such as between FY 2015 and FY 2016, the overall trajectory has been positive, suggesting a successful strategy for market penetration and revenue generation. Profit margins. Gross profit margin, calculated from sales and expenses, the gross profit margin has improved from 8% in FY 2013 to 18% in FY 2024. This upward trend reflects efficient cost management and operational improvements. Operating profit margin, OPM. The OPM has seen significant improvement, starting at 8% in FY 2013 and rising to 18% in FY 2024. This indicates enhanced operational efficiency and effective control over operating costs. Net profit margin. The net profit margin has also increased, from 5.3% in FY 2013 to 8.5% in FY 2024. This increase aligns with the growing operating profit margin, showcasing overall profitability enhancement. Expense management. Operating expenses. Reliance has managed its operating expenses effectively, maintaining a relatively stable ratio despite increases in absolute terms. This is reflected in the consistent improvement in operating profit margins. Cost of goods sold. COGS. The cost of goods sold has increased in line with sales, but the proportion relative to revenue has decreased, indicating better cost management and higher margins. Earnings before interest and taxes. EBIT has shown a robust growth trend, rising from 33,155 crores rupees in FY 2013 to 162,905 crores rupees in FY 2024. This consistent growth highlights Reliance's ability to generate substantial earnings from its core operations, despite increasing interest and depreciation costs. Earnings per share. EPS. The EPS has increased from 30 rupees and 31 paise in FY 2013 to 101 rupees and 61 paise in FY 2024. This consistent growth in EPS reflects strong underlying earnings growth and is an indicator of the company's increasing value to shareholders. Profitability ratios. Return on equity. ROE. Reliance's ROE has shown significant improvement, driven by increasing net profit and effective equity utilization. This indicates strong shareholder value creation. Return on assets. ROE. ROE has improved, signaling better asset utilization and higher returns on the assets employed in the business. Exceptional items and non-recurring costs. There are no specific mentions of exceptional items or non-recurring costs in the provided data. The consistent growth in operating profit and net profit suggests that Reliance has effectively managed such items, with their impact being minimal or well integrated into the overall financial performance. Impact on company stability. Revenue consistency. Reliance has demonstrated stable and growing revenue, which contributes positively to its financial stability and market positioning. Profitability analysis. The improvement in profit margins and expense management reflects a strong and stable profit generation capability. Earnings trends. The steady growth in EBIT and EPS indicates robust earnings performance, contributing to overall company stability and attractiveness to investors. Overall performance, growth trends, profitability, and operational efficiency. In this section, let us focus on highlighting overall performance, growth trends, profitability, and operational efficiency. Provide insights into the company's financial health and potential future outlook. This is done based on trends and growth, profitability and margins, operational efficiency, profit before and after tax, earnings per share, EPS, details from quarterly earnings reports over the past several quarters. Trends and growth. Reliance's sales have shown a steady upward trend over the quarters, with a significant peak in March 2024 at 236,533 crores rupees. Quarterly sales fluctuations are apparent, with notable increases from 1,39,949 crores rupees in June 2021 to 231,784 crores rupees in June 2024. The consistent growth trajectory underscores the company's ability to expand its market reach and drive revenue growth despite occasional dips. Profitability and margins. Operating profit margin, OPM %. The OPM has fluctuated but generally remains stable, starting at 17% in June 2021 and ending at 17% in June 2024. This indicates a solid control over operating costs and consistent profitability. The quarterly fluctuations, such as the drop to 14% in September 2022, may reflect specific operational challenges or increased costs in those periods. Operational efficiency. Operating profit has generally increased from 23,331 crores rupees in June 2021 to 38,765 crores rupees in June 2024. The peak operating profit in March 2024 reflects strong operational performance and effective cost management. Periodic dips, such as the decline in December 2021 and June 2023, suggest that operational efficiency might be impacted by external factors or increased expenses. Expenses. Operating expenses have risen consistently, reflecting the company's expanding operations and investment activities. However, the increase in expenses has been proportionate to the growth in sales, suggesting efficient cost management. The decrease in expenses in March 2023 and June 2024 compared to previous quarters may indicate improved operational efficiency or cost control measures. Depreciation has increased from 6,883 crores rupees in June 2021 to 13,596 crores rupees in June 2024, highlighting the company's growing asset base. The rising depreciation expense aligns with significant capital investments, reflecting ongoing expansion and infrastructure development. Profit before and after tax. Profit before tax, PBT. The trend in profit before tax shows significant growth from 17,270 crores rupees in June 2021 to 23,234 crores rupees in June 2024. This growth is indicative of improved operational performance and higher revenue. The quarterly fluctuations, such as the drop in September 2022 and June 2023, are likely influenced by variations in operational performance and costs. Net profit. Net profit has increased from 13,806 crores rupees in June 2021 to 17,445 crores rupees in June 2024. Despite some fluctuations, such as the dip in December 2021 and June 2023, the overall upward trend in net profit signifies strong financial health and effective tax management. The lower net profit in December 2021 and June 2023 might be attributed to increased tax rates or other non-recurring expenses. Earnings per share, EPS. EPS has shown an overall increasing trend, rising from 19 rupees and 36 paise in June 2021 to 22 rupees and 37 paise in June 2024. Significant peaks in EPS, such as in December 2021 and March 2023, reflect strong quarterly performance and higher earnings. The fluctuations in EPS are consistent with changes in net profit and revenue, suggesting solid shareholder returns and company growth. Conclusion: Reliance's financial performance over the quarters reveals a company with robust growth trends and strong profitability. The steady increase in sales, operating profit, and net profit reflects effective business expansion and operational efficiency. Despite some quarterly fluctuations, the overall stability and growth in profitability and EPS indicate a healthy financial position and promising future outlook. The company's ability to manage expenses, maintain consistent margins, and deliver increasing returns to shareholders highlights its resilience and strategic success. Company stability and competitive positioning. In this section, focus is on current market price, price positioning, price to earnings ratio, PE, valuation comparison, growth expectations, market capitalization, size and stability, investor confidence, dividend yield, liability %. Income generation, company strategy, net profit, profitability comparison, profit trends, quarterly profit variation, growth volatility performance trends, sales, revenue scale, revenue consistency, quarterly sales variation, sales growth, market trends, return on capital employed, ROCE %, efficiency and profitability comparative performance, compared to peers in the same industry. Comparative analysis of Reliance with peers. 1. Current market price, CMP hours. Reliance Industries, 2,894 rupees and 65 paise. Peers, range from 170 rupees and 59 paise, IOCL, to 935 rupees and 65 paise, CPCL. Analysis. Reliance has the highest CMP among its peers, indicating a premium market valuation. This high CMP suggests strong market confidence and a higher valuation relative to its industry counterparts. 2. Price to earnings ratio, PE. Reliance Industries, 28.49. Peers, range from 5.56, CPCL, to 14.10, Gandhar Oil Ref. Analysis. Reliance's PE ratio is significantly higher than its peers, which may imply high growth expectations from the market. However, this also suggests that Reliance is valued at a premium compared to its industry, potentially indicating either a higher perceived growth potential or overvaluation. 3. Market capitalization, market ROCE. Reliance Industries, 1,958,466.28 crore rupees. Peers range from 14,932.90 crore rupees CPCL to 2,40,894.21 crore rupees IOCL. Analysis: Reliance's market cap is substantially larger than all its peers, highlighting its dominance and stability in the industry. This large market cap reflects significant investor confidence and the company's strong market position. 4. Dividend yield, div %. Reliance Industries, 0.31%. Peers range from 0%, Gandhar Oil Ref, to 7.03%, IOCL. Analysis: Reliance has a lower dividend yield compared to most peers. This may suggest that Reliance reinvests a larger portion of its earnings into growth opportunities rather than distributing them to shareholders, which could be a strategic choice aligned with its growth objectives. 5. Net profit, NPQTR ROCE. Reliance Industries, 17,445 crore rupees. Peers range from 63.94 crore rupees HPCL to 3,722.63 crore rupees IOCL. Analysis: Reliance has the highest net profit among its peers, indicating strong profitability and operational efficiency. This substantial profit reinforces its leading position and effective business operations. 6. Quarterly profit variation, QTR profit VAR %. Reliance Industries, -5.45%. Peers range from -92.78% MRPL to -37.52% CPCL. Analysis: Reliance's quarterly profit variation is less extreme compared to its peers, suggesting more stable earnings. The lower variability in profit indicates a robust and consistent performance relative to the industry. 7. Sales QTR ROCE. Reliance Industries, 231,784 crore rupees. Peers range from 939.24 crore, Gandhar Oil Ref, to 1,93,844.91 crore rupees IOCL. Analysis: Reliance leads in sales among its peers, reflecting its extensive market reach and high operational scale. The significant sales volume underscores its strong market presence and competitive advantage. 8. Quarterly sales variation, QTR sales VAR %. Reliance Industries, 11.67%. Peers range from -75.56% IOCL to 15.94% CPCL. Analysis: Reliance's sales growth is positive and relatively high compared to most peers, indicating effective market expansion and product acceptance. This growth rate supports the company's strong competitive positioning and operational success. 9th. Return on capital employed, ROCE %. Reliance Industries, 9.99%. Peers range from 21.70% Gandhar Oil Ref to 35.44% CPCL. Analysis: Reliance's ROCE is lower compared to some peers, suggesting that while it is efficient, it may not be utilizing its capital as effectively as the highest performers. This could indicate opportunities for improving capital efficiency. Summary: Strengths: Reliance shows strong market positioning with the highest market cap, sales, and net profit. Its high PE ratio and CMP reflect strong market confidence and growth expectations. The company's profit and sales growth are robust compared to peers. Weaknesses: the lower dividend yield and ROCE compared to some peers suggest areas for potential improvement. Additionally, despite high sales, Reliance's ROCE indicates room for enhancing capital efficiency. This analysis provides a comprehensive view of Reliance's competitive standing and financial performance relative to its industry peers, aiding in informed investment decisions. Changes in promoter, FIIs, DIIs, government, and public shareholding. In this final section, let us evaluate the company's ability to generate cash and manage its financial obligations. With focus on changes in promoter, FIIs, DIIs, government, and public shareholding with the objective of evaluating stability and investor confidence. Promoter shareholding. The promoter's stake in Reliance Industries has been relatively stable, ranging from 50.27% to 50.66% over the past few quarters. This consistency indicates strong control and stability from the founding family, suggesting confidence in long-term strategic direction and management. Foreign institutional investors, FII ownership has gradually decreased from 25.41% in September 2021 to 21.75% in March 2024. This decline could imply a shift in foreign investor sentiment or a reallocation of investments. While this may suggest reduced confidence or portfolio adjustments, the current level still indicates significant foreign interest in the company. Domestic institutional investors, DII shareholding has increased from 13.20% in September 2021 to 17.30% in March 2024. The rising trend reflects growing domestic institutional confidence in Reliance, potentially due to strong performance or strategic initiatives that align with domestic investor interests. Government ownership. Government ownership has remained minimal and stable, fluctuating slightly between 0.16% and 0.19%. This minor presence indicates that government involvement in the company is minimal, which is typical for private sector companies. Public shareholding. Public shareholding has shown slight variability, from 10.43% to 10.98% over the past few quarters. This stable yet modest public ownership suggests that the company maintains a solid base of retail investors, though the public stake is relatively low compared to institutional holdings. Number of shareholders. The number of shareholders has fluctuated between approximately 30 lakh and 37 lakh over the past few quarters. This variability may reflect changes in retail investor participation and could be indicative of broader market sentiment or changes in investor confidence. Analysis. Stability. The stability in promoter shareholding provides a sense of continuity in management and strategic direction. The gradual decrease in FII stake, coupled with increasing DII shareholding, reflects a shift in investment dynamics, with growing domestic confidence offsetting some foreign interest. Investor confidence. The increasing DII stake and stable promoter shareholding suggest positive investor sentiment domestically, while the decreasing FII stake may warrant closer examination to understand underlying causes. Conclusion. Reliance Industries shows a strong and stable control from promoters, growing domestic institutional interest, and a relatively stable public base. The gradual decline in FII shareholding could be a point of concern but does not overshadow the positive trends in domestic institutional investment. Overall, the company's shareholder structure indicates a stable foundation with robust domestic investor confidence. Thank you for watching. If you like this analysis, please like, share and subscribe. Also, do not forget to visit parthakuchana.com.